Tuesday, welcome back. It's 3 p.m. time for the final hour. Markets, a little bit of a red day, more so in the stack, probably led by Nvidia with that little fake out trade. We hit all-time highs to gap up to 153 and change and sold off pretty hard along with other semiconductors. So that's pretty much leading the charge today. I had a couple of trades placed. Let me actually do a spot check on SPY, SPX. I want to see if any trades closed out today for profit. Waterfall income trades still running. Have until let's see here, late January, early February, mid February into those. Have a couple of hedges in. Trying to think here. I've got some daily profit plays running live, so no trades closing out yet. Took a trade today on what did I do? I took a ratio spread on Nvidia today, a 115 by 110. Took a setup on Snap, looking for a little income trade, potentially 400 shares I'm willing to own. Break even to be about $10.48 if I'm assigned on all positions. It's a pre-earnings play. We have earnings on Snapchat around February 7th. Really strong support around $8.55 with an upward target around $17 to $19. So I'm like I said, if it has a bum earnings report, still there's really strong support at 850. I'll take the ownership. I'll repair the stock, trying to make if I can, $500 or $1,000, which for 400 shares shouldn't be too much. If I can make $1, $2, that's $400 to $800 of profit. And then on Amazon, I added in a bull call spread. So ended up, pretty light day, 36 trades on the day, nothing too crazy, just a little spot checking. Pretty busy day yesterday. I do have some trades in here. This is some income trades. Silver needs to get its butt in gear. I'm down a few $100 on an SI futures bull call spread, but I've got a ratio spread down here that's in a lot more profit. So I might take like a $400 loss on this one. So if I take a $400 loss on this one should max out around, right now it's up around $600. So if I don't get profit, they're both expire the same day. So if I don't get profit on the more expensive one, or as far as like higher price, I need price to get above 32.75. We haven't gotten there, so this one might be enough to at least wash away and still be net profitable. So that's a little futures action. This morning's futures was pretty straightforward actually. So we had a nice little 15-minute indecision candle, started to break out around 10 a.m. See a nice breakout at 10 a.m. on S&P futures and a nice breakout as well on NASDAQ futures. So that 10 a.m. flow was pretty down for the day. You saw a breakout around 60.28 down to some fresh lows for the session. You saw a breakout of 21,700 and down to 21,400. So again, NASDAQ futures typically more points. If you trade, NQ or MNQ, having some pretty good directional moves on the day with just a nice little indecision candle at opening bell and wait for the breakout. So we're down about 1% on the S&P. Benji's going to pop up here and say hello. At the top of the hour, 4 p.m., I'm going to run a webinar on my $100 challenge. It's a strategy called Daily Profit Play, but we did a lot of deep diving last week in a masterclass, and we now have ways to take trades on the day, on the week, on the month, and hopefully, adding a lot more profitability and flexibility to kind of meet the demands of traders and, myself too. It's like I like the daily income plays, but during the holidays it was thin markets and tight volatility, low implied volatility, and I just didn't love trading during the holidays. So I thought let's go back and use the 2.5 years of data that I have, and let's see if we can kind of pinpoint what would be the best ways to trade on a day-to-day basis, or if we want to stretch that out, go a little bit further. The strategy itself is very flexible, and I can trade this out for a day, a week, even months. And it works out to be mechanically, the same trade. So I kind of like that idea better. It's way less time sensitive, and let the market do its thing. So anyway, S&P down 1% and climbing. We have the Nasdaq down 1.6%. So the Q's down 1.6, NQ down 1.58. The Dow down 0.4, a little bit less than both the S&P and the Nasdaq. Russell down pretty heavy. This is Russell growth. Oops, no, don't do that, fudge. And Q right here. There we go. Let me switch charts. IW Y is growth. Okay, so growth is down. Let's go to the watch list here. Refresh this. Nvidia led the way, right? Tesla down 4.21% on the day thus far. Amazon down as well, 2%. We had a lot of red. Mag 7's red, dragging the market lower. Is that a huge surprise? Not really. Is this the market's attempt for broadening? Probably not. Nvidia down, big, 5.35%. Broadcom down 2.2. Interestingly, though, we had other ones. I don't know if this is like a big rotation just for the day, like short-term rotation out of Nvidia into others. Micron at 3+%. Let me take a look at Micron for a second. I know there's some news on Micron. That trade is over and done with. That was an earnings play. Ended up making a small winner on that guy. Okay, where are we at here? Micron. Check the fundamentals here. I might put on a little trade on Micron if I like it. So became profitable, good company value, earnings forecast to grow, below estimated value. Qualcomm, man, that's tough to beat there with just snowflake analysis. Let's see. It's pretty fair value, right around $100. We're trading at 102. Could I do something where I would own this thing around $80? Maybe an income play, depends on IV. Let's have a look. And happy Tuesday, everybody. Okay. Could I do something on Micron in the 80s? Let's find out, shall we? So if I look at Micron, IV at 30. I think NVIDIA is probably a little bit higher than that. NVIDIA's 20. Okay. Stand corrected. 30.1 is not bad. We have an earnings play, maybe. Earnings are going to be out into March, so we've got some time. So March 21st is pre-earnings. April 17th is post-earnings. If I want to own this in the 80s, this actually wouldn't be a bad trade. So if I did a 80 by 75, 80 by 75, I could take ownership in the low 70s if I was going to take assignment. So if I did an 80 by 75 ratio spread, gross. I only get 46 cents credit on that. I think it's just because I'm not getting, even a dollar. So that's $5 lower. That owns it at 74 and change, which is still pretty decent. So August 2024, back down to those levels, ripped up higher. What was that news that just came out? There was something about chips, or NVIDIA had something positive to say about it. There's a dividend there. Any news? Micron shares jump after NVIDIA names it key supplier. Okay, key supplier. There you go. Key supplier. So is a $100 trade worth tying up some capital? Make about 10% return on risk. 85 by 80. 90 by 85. I could own it at 80 here. This is a better income play. Chance of assignment is about 20%. Not super high. I've got an 81% chance of profit on this trade. We'd have to fade that move pretty hard. Question is, do I want to own it at, let's see what the numbers would be. If I get assigned at 85, minus 5, minus $1.70. So I'd own Micron at 78.3. And 78.3 with a fair value at 108. There's some upside potential there in discounted cash flow model. Fundamentally, we are checking some of the boxes here. So earnings forecast to grow, became profitable. So that's a lot different than what I see in some of these other tech stocks where it's not profitable, not expected to be profitable. Earning shares won't be positive for another 1, 2, 3 years. So snowflake wise, it's not the greatest, but it's okay. So let's see here. Past performance, not great. Future looks okay. Valuation's fine. Dividend, non-existent. Insider selling, which I mean, sitting nowhere near all-time highs. I don't know if that spells trouble ahead if we are about to embark on. I mean, it wasn't that long ago. This thing was trading at $50. So if I own it at 78, do I really want to own it there? I don't know. It's big news to be a major supplier for NVIDIA, so that's a big deal. I think I'm going to take it. I'm going to do this on my portfolio margin accounts right in here. So let's go these guys. These guys can handle it. Those accounts I'll take the trade on. Try to go after $1.70 or $1.75. What's the income here? So 95 cents. I'd own it even cheaper. I'll take it on there. All right. So probability of profits around 86% versus 168. So it's not really the income. There's more opportunity if I actually were, if I was assigned the shares, there's more income opportunity with price appreciation or just lowering cost basis. If I went out 30 days, what's at the money covered call? $4 to $5. So I could take some chunks off of that and repair it. I could add a collar trade, of course. April's out 100 days. 90 by 85. Or maybe I say I want to own it at 50. Try this. 50 by, try this guy. No, never mind. All right, so an 85 by 80 looks okay. A 90 by 85 looks okay. $1.70 income, 81% chance of profit. Reward to risk. I mean, if I just get the income on the ratio spread, $1.70 out of 995 is a 17% return on buy power. Risk-wise, I'm willing to own it, so I'd repair it. There's not really a loss scenario here. I would just own the shares and repair them. I'm going to take the trade. So Micron got 1, 2, 3, 4, 5 accounts that I'll throw this into. And yeah, ratio spread. I like the two. Let's see. I think I'm going to go. I'll just go 170 to $1.70, $1.65. Try to get filled on this one. So $1.70. Not filling. Let's see if I can penny this thing down for a fill. $1.68 not filling. $1.67. This is also is this post earnings? Yeah, this is post earnings as well. I should get a little bit more premium out of this. $1.65 not filling? Come on, man. $1.64 got filled. All right. In on that trade. Crikey. $1.63 is filling. $1.63 is filling. There we go. Come on, man. $1.60. There we go. Got filled. And last one here. Filled. All right. That trade is in. So that is, get this one in my tracker. MU 4/17 expiration. I bought the 90 put and I sold the 85 put with 2 contracts. $1.63 credit. Willing to own. If I was assigned on the shares, I'd be assigned at 85 minus $5 on the bear put spread minus the $1.63. So 85 minus 5 minus the $1.63 is 78.37. Okay. 78.37 with a fair market value in the low hundreds, 108. So give myself some cushion. There's still already an income opportunity of 81%, which I'll take those probabilities right now. So this is 4 17 expiration, buy 90 put, sell 85 put, and $1.63 credit. Ta-da! Okay, that trades in. Okay, I'll throw that in for my Pulver alerts here. Buy the 90 put. This has a 81% probability of profit, only about 19% chance of assignment. I'm willing to own the shares. With break even at, what did I say? Break even if assigned, 78.37. Okay, so screenshot, get this thing posted. There we go. Okay, and in like Flynn. What else we got going on? Volatility is up a little bit, not a ton, still in the teens. 13% up on the day. More to come. We'll find out. We have non-farm payroll on Friday. Markets are closed on Thursday. Curious how the first part of the week, the first part of the year kicks out. We are at some fresh lows on the day, and levels I keep talking about. I mentioned in a 2024 year in review, and as I saw the markets kind of start this week, just boxed in my SPY and QQQ levels. So today's daily candle intraday wise, like a pretty decent sized sell off. It wasn't too bad first thing in the morning, but around 10 o'clock, those flows started to kick in. You can see again, nice little breakout around 10 a.m. on S&P and NASDAQ futures. So 10 a.m. onwards, like pretty rough. I didn't even know what the news did today. Let's have a look. I looked at SMH and SOXX news today. What were the prints? Anything? Services PMI came in slightly better. Jolt's job openings came in better. So positive revision plus positive. Market doesn't care about that for right now. Inflation data is next week. We are just sitting off these highs. The one thing I keep referencing, and this is a bit of a concern for my 2025, is going to be where's the U.S. 10-year yield? So it's up 1.23% today. We're up to some fresh highs. We are making our way towards this 5% threshold. It doesn't have to stop there. It certainly would be nice if it did, but this is possibly that breaking point in the bond market, right? If we get up to 5% here and start to drop, do we see the bond market actually starting to bottom out? Yields go up, bonds go down. Yields go down, bonds go up. Let's find out. I put in a trade yesterday on TLT that's out to 2027, but I'm selling calls against it, so it's a diagonal spread, and I'm trying to get an income trade out of that. So by March or April, I can make a decent return on it, and I'll just kind of continue to focus on that for the next couple of years. I think the bond market could be a really interesting income opportunity. It could be also a safe haven, but it's not a safe haven. When you're looking at 0.73 correlation between equities and bonds, it's not a safe haven. If bonds are down, equities are down. If equities are down, bonds are probably down. Until that correlation breaks, let me pull a little reference from my boy on Twitter, Charlie Bolello. If you don't follow this guy, I would highly recommend. If you like data and you like charts, this guy does it as good as anybody. So here's the correlation I was talking about. Here's the S&P 500 Bloomberg U.S. Ag Bond Index, 0.73. So this is stocks versus bonds. Highest correlation we've seen in the last 45 years. It's insane. So does that mean that it's just higher concentration? Does this mean that this breaks? I don't know. Could this get more and more concentrated? Could they break at the same time? Could we see that bonds rally while stocks don't, and all of a sudden this starts to dip and we come back into a situation like this where they get high and then they start to break. They get high, they start to break. They get high, they start to break. That correlation does have points where it breaks down. So you got to be asking yourself, like, is there a year, i.e. 2025, 2026, where the bond market becomes a little bit more attractive as investors are forced to take on a lot more risk in the equities market, right? So there's your high concentration. Okay. And then what else did I want to talk about here? Let's see. I think that was about it for the bond wise. So 10-year yield, we'll watch. The 2-year yield, which the Fed is controlling the short end of the curve, even though it's done the exact opposite since they cut rates in September. I talked about this morning in an earlier live session. The probabilities on the Fed Watch tool for 2025, the first rate cut is looking to be in June. That's at 25 basis points. I was looking today to see, is the market pricing in any type of rate hike? And from what I'm seeing right now, no. I don't see any probabilities of a rate hike, but obviously this can change with, FOMC minutes are this, is it tomorrow? Is it this week? When are FOMC minutes? FOMC minutes tomorrow at 2 p.m. I mean, did they say anything? Does it matter? The rate decision / Fed decision in January is January 29th. It's going to be probably a big nothing burger. Obviously, there could be a press conference, but there's nothing to talk about other than we said what we said in December, forward guidance, dual mandate, blah, blah, blah. Like it was an interesting December FOMC because it felt like Powell kind of went off script a little bit. And so he might be right back on like a very strict narrative for the first couple of months this year to see that the markets are not necessarily, panicking or dumping. And I think they've got to be watching this inflation stuff. I went to reference here Trueflation, which is a third-party tracker, which gave me a good idea that we're not necessarily going lower with inflation. In fact, when the Fed started to cut rates, okay, right in here as the Fed was cutting rates, that was the bottom in inflation. So inflation's been ripping higher as the Fed started to cut and cut more and cut more, and they cut 100 basis points, and yet we've seen bond yields do the exact opposite. So pretty wild reaction, right? However, it's kind of nice to see that we're not worse than where we were in, I guess this goes back to, March, April, May of 2024. And let's go, if I go back further, I mean, obviously we knew that the peak was in 2022, but are we going to be trending, back down again? Are we going to see some easing pressures on inflation, or is this going to creep up higher? I don't know, but we'll have PPI and CPI next week to find out, and then core PCE will be at the end of the month. Francois says, please comment on the ongoing bond selling off and the high pressure that puts on the market. I mean, it's the same thing. It's like I think that one of the potential breaking points this year would be that the bond market breaks. And I say break, I mean it's I'm not sure what's the UK bond. It's like the gilt 10-year. Yeah, this guy right here. So when we had like a break in 2020, it was this trade. So in September of 2022, the UK bond market basically broke. It was like everyone was raising rates, and all of a sudden the Bank of England said like, well, we think we're going to cut rates and add more stimulus, blah, blah, blah. Like they said what the market didn't want it to hear, right? The market wanted nothing to do with dovishness when inflation's getting higher across the globe. So this was a ridiculous move, right? But there was a backstop there at about a 13% drawdown. Like there was a nasty backstop and it came all the way back. That's my point. So, does that happen in the US? Maybe. And if you look at this now, it's like we've had opportunities here from establishing this low, came right back and retested and ripped hard off that level, came all the way back in again, ripped hard off that level, came all the way back in again. It's like, is this a, backstop level? At some point, does the US bond market do this, right? This is a 10-year bond. So, I mean, looking at the US like IEF or TLT, it's like, look, we're at fresh lows. Can the IEF go lower? Sure. We can come back down to these 2023 lows. In fact, this was in a nasty bear market until literally Q4 2023. That was the only reason that the bond market finished positive on the year. So I think this is a story to watch closely. The Fed is basically controlling the short end of the curve while losing control of the long end of the curve. So your 10-year, 15-year, 20-year, those bonds are falling hard. Now, am I going to be bearish on bonds? Not necessarily. I mean, I'm starting to establish a position in here, and I will probably take, this is about a 1% risk right now, defined, and I'm going to lower this cost basis to reduce that risk. But if we get down to equal lows here, I will probably take a similar trade with different legs and start this trade over again and pair these together. All right. And the reason why I would do that is, either we hold this level at, some really incredible lows, or this thing capitulates and breaks, and then the market starts to come back up with some type of reversal pattern. So this is why I'm not trying to time the bond market in 2025. If this thing wants to sell off, fine. But if we get a sell off into this low and we reverse from there and we just have a big range on bonds, well, there's an opportunity there, right? If the bond market gets worse for wear and something like the Fed having to step in and kind of backstop it, well, that could get a lot uglier a lot faster because the Fed's going to come in and be reactive to the market. And that's one thing we haven't necessarily seen since the regional bank crisis in what was that? What was the drop in KRE? Was that 2023? Like January of 2023? Yeah, so we had that like February, March. It was like Silicon Valley, Signature Bank, whatever other banks that were just, and it was like the Fed kind of forced their hand because you're forced and mandated to have treasuries on the books, and in order to need the cash and make depositors happy or withdrawals happy, they needed liquidity, and so they were forced to sell bonds at losses, and that duration killed them. And regional banks took a huge hit, but the Fed quickly came in and again backstopped it, and this became like a really profitable trade shortly after. So, like I said, I'm not interested in kind of calling the bottom on bonds. I'm just starting some defined risk trades. But if the bond market gets like broken, I'm still looking to kind of bottom pick it. I'm just not going to call that bottom yet. So, those are the thoughts. Let's see here, Charles. How are you, man? Trump drops an investment into Bitcoin after the correction or shortly after taking office, or do you follow Mike? I think this whole notion of the U.S., being this massive adopter. I mean, I think the narrative is there. I think that Bitcoin could be a great asset for 2025. You've got Bitcoin enthusiasts that are around the, in the inner circle, if you will, of the White House. Michael Saylor, MicroStrategy. Are there going to be other, Fortune 500 companies that take a page out of Michael Saylor's playbook with an unprofitable tech company that's now valued with, Bitcoin on the books? And maybe, right? I mean, it's a very risky play, but obviously if the price of Bitcoin continues to appreciate, that's good. I think the whole notion of the U.S. like making a reserve of Bitcoin, I don't think it's as easy as what, a president like Trump that just says things. I don't think it happens, right? Says things about tariffs. I don't think they're going to be nearly as extreme as what the market thinks they could be. I think there's a lot of hyperbole. There's a lot of just straight up pandering. But I still want Bitcoin on the books. I took a screenshot of this today. I think this is a really easy way to simplify the portfolio for 2025. Every equity position you have, whether you just own this could be as simple as the SPY. This could be 3 instruments right here. You could trade the SPY, GLD, and IBIT. If that's all you had for your portfolio, would I just use dollar cost averaging to all 3 of those? No way. I would have dollar cost averaging plus options in all 3 of these. But this is a 60-30-10 split. So if you go SPY, that's about 60% of the portfolio. If you go 30% here, so if you do it, everyone's familiar with the 60-40, and this would be 10% Bitcoin. So if you did a traditional 60-40, it performed no better than a 60-40 with equities and gold. So a 60-40 portfolio does not perform any better. Okay. 60-30-10, Bitcoin's been that missing piece where it is, a 1% Bitcoin exposure has doubled the S&P performance with having a 1% exposure. So rather than averaging about 8% a year, a 1% Bitcoin exposure has added up to nearly 16% annualized. And with this type of allocation, I mean, 10% is a pretty healthy chunk. But man, I mean, if you have, let's say that Bitcoin trading at 90,000 goes up to 180,000, right? So this 10% allocation becomes a gain of 100%. So that's 10% on the year. Let's say the stock market carves out, 10% a year. So 10% here, and let's say gold does nothing. If all I did in this portfolio was had, my equity portfolio make 10%, okay, and my Bitcoin portfolio make basically 100%, there's positive 10% there, and I would have on my 60,000 or my let's just say 100,000 portfolio, I'd have roughly 10K in gains here on Bitcoin. I'd have 6K of gains in the SPY, and I'll just say that gold is flat for better for worse. So we're going to make $0 in gold. Okay, you're still making 16% a year. Okay, 16% for the year, and that's on a 100K portfolio. Is that bad? 16% annualized is really good. That's double the average. So anyway, just kicking things around. I just think there's got to be ways in 2025. You got to know how to protect the downside, right? All right, let me get some comments here. Pin saying to be the house of cards that kills Bitcoin bull market or self-fulfilling prophecy makes MicroStrategy Bitcoin. Yeah, I know. And that's the hard part is, I mean, I'm trying to be, I'm not a maximalist. I'm not a doom and gloomer. It's like I'm a trader. So somewhere in the middle, I'm just using the assets available to me to trade it. And look, I think Bitcoin's great. I had a good chunk in Bitcoin. I've allocated about 5% to my client portfolio. I'm about 15 to 20% in my personal portfolio, just because I'm willing to take on a little bit more risk. But I'm not all in on MicroStrategy. I'm not all in on everything Bitcoin. It's like I have a decent like strategic allocation, and I will also trade options. So when the biggest like benefit to me was when the SEC and the CFTC and the OCC approved option trading on IBIT and FBTC and some of the other option trades. I played BITO for a while. That's ProShares Bitcoin. But now I'm in IBIT, which is BlackRock. I have some exposure there. FBTC is Fidelity. You can trade options on those. So to me, it makes owning Bitcoin, or at least exposure to it, a little bit easier. Just a traditional stocks and options portfolio can do that now. I still have the Coinbase account. I still have a wallet, cold storage, all that stuff. But that was like, when nobody knew what to do. How do you first start trading crypto? You got to get a freaking, wallet and keep it off grid and have your 24 password, blah, blah, blah. It's like, that's fine. I did that, years ago, but it's not for everybody. And so to see that the ETFs have had massive adoption and massive inflows is really impressive, which is why I think securitizing Bitcoin shows that it's kind of stay. It's pretty legitimate now. Doesn't mean I want to say that's all my portfolio, because, let's say something changes, right? The risk of quantum computing, is that enough to hack and break the blockchain? Maybe, right? Is that 3, 4, 5 years away? Maybe. Like there's all this uncertainty. I don't know. So I think it's still risk capital. I like it. I think it is a potential like great catch-up trade for anyone that's been underinvested or not able to invest, and you can put $5,000-$10,000 into a Bitcoin play and possibly make way more money than you would if you're just in the traditional S&P. So like I said, what you're seeing is there's two crowds forming. You're either all in or you're not, and like that's not me. So I'm somewhere in the middle, and it's still always going to be like a trade for me and a risk capital thing for me. But I want to know exactly what I'm doing and what my allocation is, right? So we'll see. And to that point, like PM is saying, like Michael Saylor might be like the most genius guy in the world, because he's basically bringing his company out of a doldrum and looking like he has a company that's its public stock is trading like a very volatile asset times 3. I mean, if you look at this wild swing we saw, Bitcoin had a pullback. It's market cap. So I'm gonna go Bitcoin dollar. So Bitcoin, let's just go from this little high to low, right? So that high to low right there, Bitcoin was down 15.5%. Now take that same swing in MicroStrategy, 15.5%, and MicroStrategy was down, oh, no big deal, 47, almost 48%. So 48 out of 16, you're talking about 3 times the risk, right? Now, also, that could be 3 times the profitability. That could be 3 times the reward. But man, you got to figure out how to play this well. So, I've done a little income trade here. I've lowered the cost basis from 346.90 down to 288. I will still get the shares called away February 7th. This is going to be a February 7th collar trade. So I did a roll. So 2.7 collar trade, a 305 by 245. It could get called away with a break even of around, it's like $17 profit per share. Now, if it stays above 305, great. If it gets back below 305, then I'll close and I'll reopen and I'll just recollar this thing and hopefully grab another, I don't know, $3, $4, $5 of credit. So There's a lot of ways to play this, but I'm not going to be just hoping and praying that MicroStrategy goes up. If this thing dumps back down to 241 or resets back to these previous highs at 200, I mean, look at this thing. This rip on Bitcoin is what has projected this to all-time highs. And this thing is just surging where it's, 3 times the performance and it's also 3 times the risk. So, and what's crazy to me, and this is what baffled me about last year, is there is a MSTX, which is you can't get enough MicroStrategy. How about you trade double the leverage? Now that's essentially 6 times the leverage of Bitcoin. And I know traders did this, and I had a bunch of people bragging last year about how awesome they are. And it's like, how you doing now? How you doing when this thing is down from its peak, down 83% in a month? Hopefully you know how to take profit, because that's insane. And I still I wouldn't touch this thing at all. I'm not interested in these stupid 2-3x leverage instruments. They're I don't know. It's a gamble to me. All right, let's move on. Like I said, at the top of the hour, I am doing a 4:00 webinar. If anybody would like to join me, let me share a couple links here in the chat. So here is my Telegram. If you jump into the Telegram, you should see the history chat. So there's a, let's see here, prosperitypub.com/challenge. That's a 4 p.m. webinar. So here is a 4 p.m. webinar. It's a daily, weekly, monthly income strategy. If you're interested, you can just jump into a webinar with me. And I will share my Telegram. If you haven't joined it already, here is a free link. This is a free channel. I just post a bunch of stuff in here. So that is my Telegram. Okay. And then also in my Discord, I'll share this little link here. Okay. Chris Pulver Trading Discord. There you go. So if you'd like to join, a couple easy ways to follow me for free. Okay. Good on that. Good on that. Yes, yes, yes. Okay. 4 p.m. webinar. Looking good. Alrighty. What else we have? Let's talk Mag 7. So NVIDIA down on the day. Apple, you son of a beaver. Apple is hitting the 50 moving average. Gosh darn it. I still had a nice liquidity level at 250, and it's just farther and farther away from it, unfortunately. So I was looking to see if Apple could get above 245, 246 this week, and it's not. Now, we'd have to bounce. We'd have to bounce hard by Friday. We might still have a monthly expiration that still gets us profit. We'll see. But I need this thing to bounce hard off the 50. If we see Mag 7, giving it back, and the one thing that keeps getting hammered in the news right now, and everybody sees it, is how concentrated the markets are, right? Like 30+%, it's like 37 or 38% of the index and market cap weighted index is in 10 stocks. So it's your Mag 7 plus Broadcom plus whatever the other top two are. It's like you got 10 stocks, your top S&P. So your top 10 out of 500, it's 37, 38% of the entire market cap. It's wildly concentrated. So and the question is will people rotate out of it? It's like if you didn't have Mag 7 in 2024, you didn't make any money. That's kind of what the market ended up doing. Like after 2024 settled, if you didn't really have Mag 7 to top 10 stocks, or you didn't trade AI or the stories, you didn't make any money. There were so many unprofitable stocks out there. That is seen pretty easily through this. If you look at the advanced decline line in the heat map, let me go back to this guy. Okay, right now, this is just for today, but we have 72% of stocks declining today, right? So that's pretty heavy. It flows in red. We're seeing more and more red light up here, and also looking at the entire stock market, you have almost 70% of stocks below their 50 moving average. You have now 51.5% of stocks below the 200 moving average. So we're in a pretty noticeable correction phase. If we're below the 50, still clinging above the 200, but how many stocks? I mean, if you've got 51.5% of stocks below the 200 and then 70% of stocks below a 50, that's a bear market for a lot of stocks. That's the death cross, right? The 50 and the 200, if they cross, that is a death cross. That's a bear market. So right now, there's still a lot of stocks that are underperforming. And I don't know if that has to be, get out of the Mag 7 for all the high concentration and put it into, value, I guess, or hopefully. I wouldn't put this in like just cheap stocks. I wouldn't put this in just, the price is down. It's like, man, I don't really want to touch things that are unprofitable. Um, I don't know. I think the indexes for me are way less volatile than individual stocks. I think that after, stocks last year had, triple digit winners, they can turn hard. If you go up, look, if you go 50% up, 50%, let's say 100%. If you gained 100%, so from 2024, let's say January to December, if you are a stock in the NASDAQ or the S&P 500 that went up 100%, if all this did was pull back 50%, that's a deep pullback. Like we're talking for an index to pull back 50%. That is like great financial crisis. That is like Chicken Little, sky is falling. Things are awful. So I don't really want to be a stock picker if I think there's that much room for stocks to fall, right? And sitting here at all-time highs, it's like, I know everyone can argue like, yeah, let's go higher. It's like, maybe. But we had a great 2-year run, since Q4 2022, basically two and a quarter years of nothing but bulls. So I could see 2025 being a toppy year. I could see 2025 being a correction year before we get a decent convicted buy on the dip. I don't know. And I could be totally wrong and the thing just keeps melting up. Maybe everybody's just so gung-ho on Trump that market doesn't care about anything like inflation and the fact that we have the most unaffordable housing market ever, and that inflation won't go away, and that the Fed is basically doing the exact opposite of what the market's anticipating, and yet things are fine, right? No, they're not. Like, something will break the consumer, something will break the housing market, something will break the bond market, and it's one of those, and it could be an outlier that I'm not even talking about. I just think that we're on borrowed time. The biggest thing too, it's like 60 to 70 plus year lessons, 40 to 50 plus year lessons, the inverted yield curve, the 10 and the 2-year, the 10 and the 3-month, they are undefeated recession indicators when it comes to the disinversion. Every time they have gone from inverted to disinverted, we have a recession following like 12 to 24 months away from that. So again, not the inverted yield curve, not when this happened. Okay, not the deepest and longest inverted yield curve that we've ever had, but it's when we come out of that inversion. So these vertical lines on my chart are when we had recessions. Okay, you notice how it's after the disinversion? Not that much after. So we're coming out now, and this was a crazy time. And I don't know if this is, nobody can model this because we've never seen it before. So we're going to find out. And that is one huge question mark in 2025, which is why I would rather be safe than sorry. I'd rather have protection than not. And so I just think we're on borrowed time where if things get really nasty, they can get bad quickly. And, we are seeing much faster cycles and rotation. So if things get really bad, we could have 5 and 10% corrections in a week, and if all of a sudden you get that like 10% flush and then it jumps up 7 or 8% and then flushes down again, now we're talking from peak to trough, maybe 15%, maybe we stretch into 20%. Now we're talking, oh my God, bear market, right? Does the Fed do anything? I don't know. It is crazy. Like 2018 to now, it has been booms and busts, and it's actually been an insane market to me. Happy to figure it out, happy to try to trade it, happy to not do anything stupid. But oh my gosh, man, like we have not had like normal free market capitalism. It's just been manipulation upon manipulation, money supply, stimulus, cheap money, monetary policy meets fiscal policy. And they do the most awful things like driving debts higher, inflating the living crap out of everything, and debasing your currency. But yeah, those are the only tools we have. Right? All right. Let's see here. Gamer says, you already done gold. I'm long till 2,700. I'm long too. I'm long on gold, but I'm looking for pullbacks towards 24. So I'm long. I still think we have some pullback potential here. Really simple gold is this for me. We had a 1, 2, 3, 4, 5 wave move. So this little peak to me was my 5th wave completion. I'm expecting an ABC correction. So somewhere in this area, that would be like an ABC correction, somewhere in this area. So I'd say 25 would be like the shallow end, about 23 would be the deeper end. But if we pull back into, I like 2,400 a lot. If I get a price tag at 2,400, I'm going long gold for revisit of the highs. I mean, ultimately, I'm going to take your project or your projected target. I'm going to 3K. I mean, I think 3,000 is a valid level in the next, maybe 1 to 2 years. But I think a correction is needed. So do we have like this is the third wave top and the fourth wave bottom? We either test this resistance or we test this fourth wave low, and then I'd look to resume getting long on gold. So I'm hoping we get a pullback first, but I am long. Okay. Oil, I did see that today. Oil's up over 1%. We're at 74 and change. Just be careful on oil. Okay, it's been on a rip, yes. Okay, today's candle's not super impressive. The only way that I'm going to maintain a bullish posture on oil is if this thing can hold and pause up here for maybe a week. On the daily candles, I'd like to see like 3 to 5 candles holding above the 200 moving average. Because what we've seen is it tests and it tests and it tests. But if we don't stay above here, this thing has faded hard. So if this fades, we're right back into the same mix of chop, right? But if it stays above with 3 to 5 candles, then I think that could be a bull flag and there's more ahead. Now, again, oil going higher. I put a play on, USO, I don't really know. I put a trade on natural gas. So I did UNG. That's a trade out to 2027. It's a diagonal spread. It's an income play. Nat gas has been running pretty nicely. Today it's not. So my UNG trade, which I'm going to add in here, UNG, add this in, and I'll move that up with my US oil. There we go. And then USO, I'll add that in. There. So US oil, USO, and then nat gas and UNG. My trade's down a little bit, but I'm looking out to like 2027. We'll see. Gold, silver. I still like silver better than gold technically. I would like to see silver get up here and kind of make its way to 36. If silver continues to kind of hug this trend line, there's still a lot of good support here at 26 to get long. The reason I like silver is because I can measure the move. Gold is trading at all-time highs. So gold is hard to measure. We're at all-time highs. It can obviously get higher, but I think a correction is needed first. Silver, on the other hand, is attractive enough to get to a measured move. And if you look at gold versus silver, I think there's a nice multi-year range here that if we start to see silver gaining strength, then this, comparing the two, gets pushed back down to range lows. So that to me would be like the timing of, okay, silver's doing really, really well. Let's see if this goes from like resistance to support, right? So looking at that. So you good on oil there, Jonathan? I think oil is something to watch, right? It's been doing really well the last 4 or 5 days. My concern is that if we don't have multiple days holding above the 200 EMA, that this is a fake out trade. Okay, so I think it's good, but my gosh, we threw like literally a Middle East conflict at this, and this oil couldn't do anything. So if Trump and the Republican administration and they want to go domestic drilling and they want to add more supply, and Saudi Arabia is backing it, they both want cheaper oil prices. They want more market share. Guess what? They'll drive oil prices lower by supply. So there's I don't know. There's like supply constraints. There's demand in Europe, like a cold winter. There's demand in the U.S. Cold winter, natural gas is a big deal. So I like kind of the natural gas play for right now to see if that's going to move faster than oil. But either way, it's like they call natural gas the widowmaker, so be careful. Oil, it hasn't really proved that it's going to be permanently bullish, so I'm just watching carefully. Bitcoin at 96. I'd love a pullback towards the 90 to 75K area. I'm not going to time it perfectly, but if we do have a pullback, pulling back into 90K or pulling back into 75K, like I'd probably add a position there, and just let it go. Longer term dollar cost average, throw a couple bucks at it. Also have some, I've got a collar running on IBIT right now. Let me see how it's doing. So if I looked at IBIT, I'll wrap things up in a few minutes and I'll share that webinar again for 4 o'clock if you'd like to join me. And I'm going to get let's get the presentation downloaded. There we go. All right, good. Okay, so IBIT, where are we at here? IBIT. So there's the shares. Call at 67 and the put at 40. So it's a collar trade. I mean, I've got some upside. I collected, I think I did, those are dollar cost average levels. Let me double check my collar trade in here. I put it on at the same time, so I should be able to get a trade history out of this one. And I'll go in the last 30 days. There it is. So there's my 67 call that I sold and a 40 put that I bought. That net should be about $1.90. So it allowed me to, lower my cost basis by $1.90. I bought the shares at like $30. I bought this thing shortly after like they were released. Let's go to IBIT. So we had our, first rip and then a pullback. I was buying this thing in the low 30s. I just kind of accumulated equal low. I didn't really have to add a lot, but I did. I added some here, but I was basically dollar cost averaging on this accumulation cycle. And, the extra kind of bonus during the election was great. But now it's like, okay, so let's have a pullback here. Let's form another base. Let's have a higher low. Let's look at a trend line. And I just want to see how technically sound this is. Does this just pull back to a trend line? Do we have, kind of a channel that got a little bit overcooked, and so we're going to pull back, maybe find the midpoint? Maybe technically that's a fair level. So, in the 50s, like low 50s or mid 40s, maybe IBIT finds some support. But if you're going to do analysis, like look at Bitcoin. Bitcoin and IBIT, the thing I like about it is it looks pretty much the same. So if Bitcoin's down in the day, IBIT is down in the day. MicroStrategy is different. It's crazy. It's more volatile. Coinbase is different. FBTC is a little bit like it, but it's a ETF that's $30 more. BITO is a high dividend ProShares ETF that doesn't price at all like Bitcoin because of the dividend. So anyway, I still like it. You want exposure? There's ways to trade options on it. I'm doing a lot of income trades on IBIT this year. How do you put together what is that? The uninversion. Okay, so the disinversion and potential recession in the middle of Bitcoin bull cycle. Recession with stock market. Well, that's the thing. Either Bitcoin finds a way to have its own kind of island where it stands alone, like, hey, Bitcoin is now performing differently and non-correlated, or it's the same as everything else. And my gut tells me, this isn't right necessarily, but my gut and my hunch is that Bitcoin is way more correlated than people think. All the maximalists out there say that it can't be stopped and it's the best asset and it's a bull cycle, blah blah blah. It is directly correlated from what we've seen with the Nasdaq and money supply and risk appetite. Example, December when the market dropped on Fed Day, it like record outflows. It was record inflows for a year. In a year, IBIT as a Bitcoin ETF did more than it took 8 years of GLD. That's how much money was getting dumped into it. But the outflows that happened within a week were insane. So I think when, if everyone's looking for an exit, Bitcoin's going to be like Mag 7 and Bitcoin are going to be like the first things to topple over. And if there's like high concentration in both of them, we could have some really, really fast, aggressive, nasty selling. So I don't think that it just stands on its own. I think that if the financial markets had a lot of trouble, I don't think Bitcoin's going to be, surviving and like the only thing that's untouched. I don't think it's immune to risk off. I don't know how it can be when you securitize it. It is tied. Like you've got BlackRock, one of the largest asset managers in the world, and they have an ETF. Like they've got a hat in the ring, skin in the game. How is it not tied to where money is flowing? If money supply dries up, if there's financial tightening across the world, if we have a risk off tone, if sentiment is sour, who knows? So I don't think it stands on its own. Twitter, yeah, it's right here at Charlie Bolello. Twitter. So it's at Charlie Bolello right there. There you go. So shout out to Charlie. I just love. I've followed Charlie for a long time. Like he's had Y charts, and it's always been something on Y charts. But he just does a lot of good YouTube stuff, and I love the data. It's like you don't have an opinion, just throw the numbers out there, make a few conclusions. But it's like, that saying that history doesn't repeat itself, and it rhymes. The fact you can look back and a lot of the data points he shows out, it's like 20 years, 40 years, 50 years, 70 years. It's like, I like that stuff. I want to go back and find all the history to kind of form some opinions. So between, Charlie Bolello, Darius Dale with 42 Macro, and Jordy Visser, the dudes at Market Huddle, it's like Kevin and Patrick with Market Huddle. They do a great job with their interviews. That's typically my media consumption is financial podcasts. So yeah, they're pretty good. Cool. All right. Hey, everybody, it's 3:57. I'm going to go. I've got a 4 p.m. webinar. If you'd like to join me for that webinar, I will post the link. Just give me 1 second here. If you're in my Telegram channel, it's already posted. So I posted the link right there. I will post it again in this chat. So let's go to this one and this one. Here you go. So if you'd like to join me at 4 p.m., just a webinar, a little strategy that I do day-to-day live sessions. We take some bonus trades. Sometimes I don't take a 0DT. Sometimes I do. I'm really liking the kind of the weekly and monthly income, just letting the markets be the markets and stay out of some of the directional moves we may see during the week. So anyway, but it's a fun strategy. A lot of traders having a lot of success with it. It's been a nice little profit play for me the last 3-4 months. And some I mean, I've essentially done the strategy for years. It's just when 0DT started in 2022, I took a lot of my core strategies and I wanted to see, will this survive in a 0DT environment? Is this going to be worth trying to trade down in like this very aggressive, accelerated 0DT world? So yeah, it does fine. It is great. We're winning about 90+%, and hopefully lots more to follow. Cool. All right, everybody, I'll let you go, and I'll be back tomorrow for another final hour. One of these 3 p.m. sessions, I will be joined by some guests, probably Roger Scott, Graham Lindman, maybe Nate Tucci, a couple more. We're just going to talk about maybe when Trump takes office, what we expect, some more big plays for 2025. So either I will be hosting that webinar here on my channel, or I will post a recording of that session that we do, just for some more insights with not just me, but other traders that I like and respect out there. Cool. All right. Thanks, everybody. See you soon. Thanks. Bye.